Hey people, good morning, everybody. I'm happy to be here. Happy New Week to all of us. I hope this volume is good enough. Let me check. Right, sound check. Let me hear it from you guys, or maybe you can write a comment. That's if you can see me, and of course, if you can also hear me. Okay, I enable my video this morning so that I can just see some people's faces. For example, Isaac Gawusu, right? I can see you. Joseph, welcome. Let me see if I can see somebody else that also enabled their video. Just give me a second to check. Rachel Adibimpe, you're welcome. Okay. Joseph, how are you? Joseph, can you hear me? Joseph? Okay, Isaac, you raise up your hand. You want to tell me something? Go ahead. That's before we start. You can see my screen is blank. It's on purpose. I have not opened any chat. I just want to, have just even if it's a moment or two to say hello to people. Just give me a wave if you can hear me. Okay. Okay. So nobody's responding. Let me check the comment section if I can see one or two people. Right, the sound is good. Let me see. Let's check. Right. Okay, so I think we can start. So starting, I'm going to disable my video because of course my face is not as important as what I'm about to show you. Right. So let me just quickly take a moment to do that. Then I will leave my voice on. That's the most important one. And the next thing I will do straight away is to start the chat. Now, the chat I'll be starting with today with the Euro USD, all right? Euro USD. And of course, I don't know why I love trading that particular instrument because it's as if anytime I place a trade on it, it gives me money. Okay, so that's why. Now, that's the default screen. Let me enable this. Okay, that's the default screen, default view of Euro USD or default view of any chart that you can think of. Okay, so if you're trading and you open your chart, say for example, you're using laptop, this is the kind of view you will see. Right. So my opinion for Euro USD this week is not going to be different from what I gave you people last week. Last week I gave you guys a buy. Let me do Control G, Control Y. Now Control Y give us days. Okay, give us days. What I want to show you is to quickly show you what I asked you guys to do last week. Okay, so this one is days view. Now this is today. Let me just paint that part. Okay, so this is today, right? And let me double click this. Please follow. This is Friday. This is Thursday. This is Wednesday. This is Tuesday. And this will be Monday. So Monday last week, I told you guys, guys were going to go bullish. And of course, we place a buy, all of us. And of course, that Monday, the price actually was stagnant that Monday. That Monday. But eventually on Tuesday, Wednesday, it rose. So by Wednesday, if you have any trade on Euro USD for a buy, it should have closed. And of course, I think on Thursday, Friday, there was PPI, that's the producer price index, market survey that was released to the market, and of course, it made the market bearish. But overall, I think Euro USD is bullish. Okay, so that's looking at the weekly view and all that. So let's do something together. Let's see if we can just analyze. Somebody is raising Joshua. Don't worry, I'll attend to Joshua. Maybe let me just read comments. Okay, thank you, Professor Abiodun Olapadi. Wow, Professor. So, Professor, I have Professor as my student. Interesting. Professor, you're welcome. I'm happy to actually have a professor that I'm also, kind of like, being a coach for. Professor is overall coach with everybody. For somebody to attain the feat of professor, it takes a lot of, learnings and all that. So, I greet you, sir, especially. You're welcome. That's this greeting is to Professor Abiodun Olapade. And because you are here in my midst now, you're not going to be the first professor that will coach in trading. And of course, I hope that you're not going to also be the last. So a lot of people will still come and join us. And because you are here in our midst today, I'm going to give Apologies, everyone. I'm actually truly sorry. Let me enable my video one more time. I'm especially apologizing to everybody listening to me. I had internet time down. That's from the feeder. Now I've switched permanently to my phone, since my phone can also give data. So apologies one more time. Let's continue. I've enabled my screen also. I think you can see what I'm displaying. I hope so. Let me ensure that we're there. Yeah, right there. So let's look at what Euro USD will be. Like I said, before the internet went off, I asked you guys to place a buy. So let's see if some of you have already done it. It's fine. I've just placed my own buy. Now, why do I pick a buy trade? That's the next question, because it's also important for you to, beyond the rhetoric of saying, oh, buy, oh, sell, and all that. The reason why I would like for you to place a buy on Euro USD is because if we go to candlestick templates, for example, it is easier to also see now that the Euro USD has been ranging for a while, right? So if I pick this and after the sudden pull to the upside, so we have this range, kind of, it's more like a range, right? So if we even, kind of like fit it to like that, and then adjust down. Okay, let's see if we can just do this. So this is more like a range move, right? More like a range move. A range move is that if you capture all the candles, you can see more than 10 candles in there that are captured. That means, apart from the fact that they have tail and head, that's the wicks, the lower, wick and the upper wick. Outside of those bounds, most of the candles have their body inside of that. So because of that, I think a breakout on either side, that is the sell side or the buy side, might actually give us something. But based on what we know on Euro USD, and based on what the price has done of recent, after the downfall, we plot a fib, right, and pick these two lows, and that's the lowest and the highest point. I feel that the price will still go back to 61. Okay, if it doesn't get back to 61, it should get back to around 70. It's probably feeling a void, and of course, the void it will be feeling might just be this one, right? I think this one. Okay. Just fill this void. More like a gap in there, right? Now, I don't want to discuss that. That's a little bit beyond this class analysis. I think the price might want to fill this void. So even if it's going to continue, might not fill it. But sentiment-wise on Euro USD, the daily bias is still standing. So if you look at the daily price, I think we might still be on the buy side. And that's because if you look at the trend indicators like moving average, if you pick, say, for example, if you pick 50 or anything, you pick, the price is above them. Pick 21, the price is above it, and 21 is a very strong indicator. Okay, so let's do 21 and exponential for you to be sure that the price is very much above those averages. So based on what we can see now, you can see that the price is actually respecting this 21 period, resting comfortably on it. So I think this USD, my opinion, is still going to go up, right? Now you need to know that price and moving averages are one and the same, because moving average is a derivative of price. That means this black line that looks like a snake called moving average is a derivative of price. That means it's derived from price. Now, anytime price moves far away from the average, what happens is one of two things: either the price will return to the average or wait for the average. So in this case, Euro USD, after this pull up, okay, after this pull to the upside, up to this level, what the price is doing now is that the price is actually returning to the average, okay, and getting to the average, that's found the support. The way I see it, that's found the, so because of this, this price might just be on its way to the upside. So let's quickly jump in now that the price is still close to the average on the daily chart, and also on the 4 hours. Also, you should be seeing consensus. So the price is fast approaching the average, and I feel that the price will break it on 4 hours and also 1 hour. If you check now, the price is comfortably breaking above the average. So let's go ahead and be on the buy side. Now, let's look at the stop loss and the profit, since we are on the daily bar. And daily bar is for daily traders, or the day traders. So let's zoom in and check what the stop loss could be. So the best stop loss is going to be, you can check to see possible areas where we can place our stop loss. This area is good enough. That's area 1. This area is also good enough. That's area 2. This area is also good enough. That's area 3. This area is also good enough. That's area 4. And so on and so forth. So you can consider different areas where you can put your stop loss. All those areas are marking for you as support zones. Now, as far as I'm concerned, I think I'm going to go with either the first or the second one I mark here. So it's either I go with this guy or this one. So if you ask me, I think this price is good enough for a stop loss. So this is how you easily pick your stop loss on the chart. Now just pick, if you pick a price, say for example, you pick your crosshair come, this price, this one here, this one that I'm touching now. Hope you can see my screen, everybody, whether you're using your phone or not. Please confirm to me you can see my screen, you can see my mouse. Just type yes if you can see my mouse. I'm getting a price. Type yes if you can see my mouse. Good. So that price I'm touching is good enough for our stop loss. Now, what would our profit be? Right? The take profit could be anything. You can see the way I just commodity zones. Now, you don't have to go overboard and be picking all these ones and stop loss, all these ones. Those are far away and, of course, bigger risk. You don't need that. So it's either you pick this smaller risk or this, medium risk. I think this one is good enough. If we check, it should be around 27 pips or 20, less than 30 pips. So it's still good enough, right? So let's pick 1.8605 as our stop loss. Remember, we did instant buy on Euro USD, so nobody should ask me what's the entry price. There is only for that. Okay, my price for entry cannot be the same as your price for entry. It shouldn't be the same. Okay, if you do instant execution, you click a buy or sell on your phone or laptop. Internet feed on your phone or laptop takes the information to the broker server and the trade server. Of course, the trade is processed and somebody sold to you. Okay, now the selling price, that since you are buying, the person that sold to you or whoever sold to you in the market also have is an agreeable price based on internet feed. Okay, of course, that completes the deal, and of course we have a trade. So my entry price cannot be the same as your entry price, right? Now, stop loss can be the same, take profit can be the same. It's true. Okay. Of course, even if the entry price is going to be the same, it's going to be very rare since a lot of us are picking trade at the same time. It could be that maybe one or two of us will have the same entry price, but of course, we can have the same take profit and we can have the same stop loss. So the take profit we are using today is 1.08605. I can write that one out if I share a screen, but before I get there, let's look at the take profit. Sorry, the stop loss is 1.08605. And the take profits can be, let me see if I can first of all write it out somewhere here. Okay. Let me see if I can just type TP plus SL. Okay. Give me a second. I want to type it out for you guys. The take profit is going to be around 1.09. Sorry, 1.0922 or 285. 1.09285. Stop loss is going to be 1.0. So I'm going to take this very fast to new share. So what I have here is right. Euro USD. That's our first trade for today. Trade equal to buy. Right. So we place a buy trade. Now we have TP because we have stop loss. And the TP is going to be 1.09285. And the TP, so that's TP. The stop loss is going to be 1.08605. That's what I have. So go ahead and place your trade if you're just joining us. Go ahead and place a buy trade on Euro USD and use this take profit and stop loss I gave you on the screen. That's mine. Of course, if you want more take profit, that's if you want more profit, you can use more the program means you can pick a higher price than this. So you can go ahead and pick a higher price than what you have here allowed. But the stop loss should be around this level. That's a desirable, stop loss for our trade. Now, let's hope for the best for this week, for this Euro USD trade. Somebody say type it. Akinugba Alex, say type it. I'm calling it, and of course, you're seeing type it. Anyway, it's typed already, and of course, you can pick the trade. Now, now that we have placed a buy, let's look at another instrument. Let's see if I can just share my screen again. All right. So that done, let's look at the next instrument that, or maybe I can just allow you guys to tell me what to look at. Okay, so I've looked at Euro USD. Now, everybody, if you can, give me what you feel I should look at. Okay, the ball is in your court. I'm waiting. I don't want to be the one to give you something. Gold, all right? So I'm gonna quickly go to gold. GBP USD. Don't say BTC USD. All right, so because of the person that said gold, let's look at gold first. So I'm going to go to gold chart right now. Your presence, I'm going to go to precious metal and pick gold. Now, based on what this gold structure is doing, it's breaking a structure. And of course, I think gold price might eventually just drop in the chart. Why do I say that? If you look at the same way I was analyzing Euro USD even before we start, you can see that the price of gold is actually descending because that's broken a structure. So let's look at, let's look at trend line. The trend line is showing this, right? Okay. I think I also gave you this kind of trade, this trade of gold last week that is going to actually go down. I think so. So what we can do is to be on the sell side of gold. Now, the gold I'm looking at now just broke a structure. Even before I switch to candlestick chart, you can see that a structure is broken somewhere around here. Okay, that's the structure broken somewhere. Okay, so breaking that structure means that the price must actually go down. Now, let's say that we don't want to enter sell directly. That we want to wait until the price returns to either this broken structure for a retest or until return to this trend line. So it's either of two things. Either that the price will return here and to collapse. That's option one. Option two will also be that the price will is so ferocious enough to even get to this trend line. And that will be a collapse, a total collapse of this price. So it's either the two, like I said, it's either the price returns to this trend line in the near future. If it does, you place a sell. If it returns to this level, you place a sell. But because we don't want to be, we don't want to assume or wait for the price to get to this level. Okay, because of course I know that some of us don't really have time to stick with our charts 24/7. We can do something. We can do sell limit on gold. Okay, that means if the price returns to this level, we can take it in as a sell. If we return to the trend line, we're taking it as a sell now. For the trend line, it's going to be difficult to choose because we don't know when the price will get to the trend line. We never can tell until the price will narrow and get to the trend line. It could take longer, right? But I think it will get to this line first. And of course, if the price lingered, if you can check it and see that the price lingered around here, get to this zone where the line is meeting the trend, where the horizontal line is meeting the trend line. If the price can do that, then of course, by all means, you can place it at this intersection. That would be very good. Okay, so but if it breaks above this intersection and switch to the upside, then by all means you can close your trade. That means you can disable sell and continue to buy. But I think gold has done what it needs to do. Okay, it has proven their points. Okay, and price has never been this successful against dollar. Gold has never been this successful against dollar. So I feel that there are voids below, a lot of them that needs to be filled, right? A lot of void. You can see some of them here. Those are imbalances in the market created because of the price volatility of gold. Okay? Those areas needs to be filled, right? Especially that's if the price will continue to go up. But I think by and large, gold might just reach for a bit, on the D1 for it to continue to surge forward, or it will collapse from henceforth. So let's go ahead and do a sell it. So I'm going to go now to candlestick chart so that I can see better. You can see that I'm not using any indicator for this chart. I'm just using, basically price actions. Okay, that structure of chart structure. Now I'm going to look at candlestick option before I look at indicator option. That's since we are suggesting itself. So let's look at what the indicator option is saying. Say, for example, we choose advanced channel. Let's see what that one is saying. Then, even before that one finishes, let's open another good chart. Another good chart. And look at another option for the reversal candle. Sorry, the reversal indicator like Ninja Band. Let's see what that one is saying. Okay, and of course, another one that we can also look at is say this one. What's this one saying? Right. So let's also look at which one can I look at? Let's see this one. All right. So by and large, I think we're still on the same page. It's actually, something of this point. I think sell limit will be fine. Sell limit will be very fine on good. Instant sell is not good. And of course, instant buy also is not good. Except you just want to risk it and buy a little bit until you get to this line. So I think what good we do is to get back to this level. So let's do sell limit 2166. Please confirm to me you can see the price that I'm touching. 2166. Just type yes if you can see the price I'm touching. 2166. 2166. That will be our sell limit price. 2166. Okay, thank you very much. So we can do a horizontal line to around 2166. Let me see if I can modify this to choose, say, the second option here. Also, parameters to say I want 2166.1 or even 0.02166.0. So that will be the price we'll be selling gold. So be selling from 2160. That's when the price made this intersection, right? So let's see that's area amount. So if the price can get to this level, sell. That's right. So if the price can get to this level, that will confirm if you confirm this trend bias and of course the price drops, then we can just enjoy the price, right? I remember we having the void to fill, so I think the price will still fill the voids. I think so. Let's still get to this level. I think so. So let's wait for this level to materialize. But if you want to jump into a buy now, it's okay. Even though I'm not going to do that, I'm not going to do instant buy. I'd rather wait for price to get here. Now, remember, good things come to those who are waiting. Okay, so don't let us jump into good like we jump into you. All right, so that's it for gold. So let's say we are using 2166.00. Then I can share my screen with you guys. Of course, remember, we can also use this level as our take profit. Let me see if I just plug this one up. We can use this verify resistance test count 2 as our stop loss or 2194.35. Say we use 2194.00. Wait, let me confirm that. 219. That's very nice. 219.35. So let me share my screen. Pick this. See, we are entering. Let me clear this one first of all. Clear. So let's look at this. So we're going to do selling it, right? That's the we are choosing. So entry price, theta 2166.00. Take profit, stop loss. So the take profit can be anything from say 2134 or 2110. So let's say take profit is 211. Stop loss is going to be 21. So go ahead and place your trade very fast. sell limit on gold, entry price are given, take profit is given, plus is given. Go ahead and execute those trades and then we can move to the next thing. Shall we move on? Say yes, then I'll move. Shall we move on? Say yes, then I'll move. Okay. So a lot of people say USDPY next. USDPY next. Okay. So let's go to USDPY. I'm picking trade at random. The trade is submitted. I'm picking them at random. So let's look at USDPY. I'm going to share my screen with you guys again. Then I'll go ahead and pick new chart. And then I'll pick USDJPY under majors. USDJPY. Now, USDJPY, I don't know why JPY is so stubborn. No, someone says that it's supposed to be winning against dollar, right? If you look at D1, dollar is still, by and large, dollar is still very strong against Japanese yen. But if you look at the monthly chart, you want to get the general direction of this price. The monthly chart is, on the upside. Okay? But I think eventually this price is going to go weak. I think so. That means this price is going to fall. I think, But of course, if it does this and escape, then we're looking at a very, very bad future for Japanese yen. What I mean is that if this price, because if you look at this zone, and that's the number of people traveled in there, and you compare it with this one, it should be almost the same, right? Can you see it? So, what I feel this Japanese yen will do is that if it eventually escape from this zone, let me put horizontal line for you guys. If it eventually escape from this zone, then by and large, it will also do another thing. Also do another one. That's if it eventually escape from this zone. So I actually expect this price to collapse. Okay. I expect it to collapse because it has proven up point, it has broken a previous resistance. Okay, a previous resistance right here. I was actually thinking that the Japanese yen will be so ferocious enough to actually withstand this zone. But since that level is broken and price is comfortably around it or above it, then I feel that if this price eventually do whatever it wants to do here and escape, it will go to this next level. But before it go to that next level, it could do something like this. Those are possibilities. It could also do something like this in between. Because I would like to see that also. I would definitely like to see that. Definitely like to see this. Okay. So I would definitely like to see something like this. So that's why I said this Japanese yen would still do something like that. So sell is still good. Sell is still very good. Now, if we're expecting something like this in between, okay, let's see if we can move that. See if we can do that. So if he's going to do something like this in the future, okay, because he can actually do that. So if he's going to trade inside of this zone in the future, remember we're still looking at the monthly chart. These are objective analysis of gold so that you can have an idea of this thing I'm doing for you guys. This thing I'm giving you guys is for you to know how to actually analyze technicals, okay? To see what is actually to come. You can see into the future. So if Japanese yen is going to go strong, now that strong or whatever, however strong it could be, may not just be outside of this, but it could have been desirable. It should have been very fine if you can just do this. We sell a little bit, and of course, if it's going to go up, it could also do something like this. That's a repetitive thing there, where it can actually go ahead and someone tables and break all bounds to around 198, right? Now let's zoom in a little bit. Oh, sorry, before we do that, let's go back to W1. So on the W1 front, we are beginning to see price ranging. This is more like a range, right? Okay, so it has gotten there, it's supposed to break it. So it's still playing around. Even if you break it, it can just go up, right? But I don't think it will just break it and go. I think it will just play around it. Okay, so we know that. Now let's go to D1. This still again, and of course we can see it on the D1, the price is still, very much, capable of breaking that bound and going up. So what we can do is now begin to plot what we call trend line from this level. We can do this, right? We should be able to do that. So let's see if price is going to form a trend around this. That since we're expecting that the price will break above, yes. But let's see if the price will now give us a trend. Now, if this trend holds, if this trend line, if this pattern holds, then the price will collapse back into destruction, right? We already said that. Price will do that. Collapse back into this green zone. If this trend line holds. Now, let's see what the 4 hours will say concerning this. Right, so that trend line is still holding on 4 hours. So you can begin to see now that this zone, this support zone is holding. That this white zone in between is actually holding because this like support resistance, resistance support, support broken to the next support, and of course resistance broken now to the next resistance. So even if the price is going to go up, it may not pass this level for now. So let's look at, go ahead and check the H1 if you can actually see a trade. So 1 hour, finally, this is our last bus stop. Anyway, so on this 1 hour, we are looking at price getting back to this level, right? So let's paint that place. Everybody should now look at between 150 and 150. That's between 150 to 60 and 158, 60. If the price can give us a trade around that level, we'll trade. That means if the price get back to this level and give us a bearish engulfing, you already know the answer. We'll just place a trade and make money. Now, let's go ahead and place an indicator that will tell us what to do. Say, for example, moving average. Right, so the pattern is holding on the moving average front. If we zoom in, we can see clearly that the price is comfortably, sitting around the average, sitting around it, okay, giving us a leeway to be. Now we can as well wait. Remember, we are waiting for the price to get to this level. So if it is to buy, yes, we could have bought, but I don't think I want to buy. I really don't think so. Except you want me to just add one more indicator to see if it is right for us to 50, and then we change something simple. And then I can also change the color to say blue. Okay, let me use black. Since I like using black, then I can change this one to red. Based on what this one is saying, we miss the buy, right? We can't buy again. Based on what this indicator is saying, this is where we would have bought this level. This is where we would have placed a buy trade. We missed it, so we can jump in again. It's too late. Now, let's wait for the price to get back to this white label. And of course, once you get back to this white label, then what you need to look at for is sell. If you see a bearish engulf, you can go ahead and sell. If you don't want to wait for that bearish engulf, you just want to jump in, then by all means, sell limit is your best bet. And the sell limit price could just be around this 150, anything in between. Say, for example, use cross here to say 50% of it to say 150,481. Still enough. So if you must trade on USDJPY, sell limit is good at 150,481. I'm going to clear the drawing and do USDJPY sell limit. And the price is 150,481. Remember, it is sell limit, entry. What of stop loss? Stop loss, we're going to look for that, but take profit anything. Say 148, 0.5. 148, 0.4. That's our ticket. Stop loss, mind it. If I do this, let me see if I can just do this. Give me a second. Okay. Stop loss, maybe 151, 495. So I'm going to, continue to share this. The stop loss 151 or okay. So everybody go ahead and do this. Entry for USD dollar. I'm sending it is seen on the screen. And that said, that done. Now go ahead and thank you very much, Henry Joshua. He actually prayed for me. Good job, sir. God bless you for your concern and effort. Thank you very much. I like that. I actually like it when I receive prayers like this. All right. Okay. Thank you very much, Henry. Okay, thank you very much, Uncle O. Thank you very much. All those people that are saying thank you, I thank you too for listening to me and thank you for following. Okay, thank you very much, Akane Taiwo. I think this particular analysis is actually objective. I like that. Okay, so more is coming. Thank you very much, Ebuka. Thank you, Kennedy. Thank you, everybody. I thank you, Lukayode, Oguyomade. Thank you very much. Okay, so Siri, Rishi, let's go ahead and check the next one. Okay, I think we have looked at gold. Let's look at US 100. US 100. So objectively also, if you look at US 100, US 100 is under commodity part 3. This one did not. This one did not trigger. Let me go. So we can adjust it. I can just pick up this trade. It didn't trigger last week. I actually set those ones as a try. Price did not come back for them. So objectively, first of all, the first thing we're going to do on this US 100 is to look at potentials. Okay, beyond fundamentals, let's look at potential. So first of all, you need to know that this trend is up. That's the first thing you need to put in your mind. I'm looking at this screen you're looking at is the monthly chart. The monthly chart gives me an overview of what US 100 is all about. Okay, so by and large, it's what it is, right? So it's uptrend, confirmed. Now, the next thing you want to do is that you want to know is that even if this price is going to collapse, because nothing lasts forever, it will not collapse above this line, okay, or below it. It will just be something like this. So if it's going to collapse now, this will just be the next level. And even if you don't believe in this particular one, if I change it to, oh, sorry, before I change it, let me delete this and use the 50 period. 50 period is a very strong one. Moving average 50, 650. You can see now that the moving average is supporting it right there. And even if I change it to simple, I think they're still going to be almost the same thing. The one I used was exponential. The exponential is different. But this is the simplest one. Okay, that tells us what the price is doing. You can see that they are the same. Okay, so now that we know that trend is up, the next thing we want to do here is to, since this one is not like the Japanese yen that is turning, Japanese yen gave us an idea of what the price could do. Okay, breaking bounds and reaching resistance. This one up to the first approaching here, the price is reaching for the highest. So going back down to W1, it's also obvious that the price is on the way up. But then, like I always say, nothing lasts forever. This price can return to the average. Remember, if the price is too far from the average, one of two things will happen. Either the price will wait for the average to come close. That means if this price doesn't want to, as at the time the price got to this level, what it does eventually was that it trended down, right? Came down, 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 broke the average, went down, went far away. When it got to this level, it actually returned to the average. So this is like, I don't want to go more. Let me return back to the average. Found resistance and drop again. This time around, it waited and waited for the price, sorry, for the average to come around. When it did come, it approached the average, got close enough and drifted away. Eventually, it waited and waited and waited and waited. When it was not coming, it came around and broke above it, tested it again and broke away. Now, when you get to this level, observe this. The price played around and played around and played around, waiting for the, as at when it got to this level, this average was around here, right? So as at when it was playing around, the average was actually coming close. Eventually, they got close. There must be some handshake around here or an agreement, even though there was no actual handshake. What we call handshake is, for example, right here, handshake, right here, handshake, handshake, so on and so forth. Handshake, and handshake. So since there was no shaking of hand, but of course it's close enough, the price actually drifted away. So another scenario might play here. The price, instead of dropping very fast to this moving average, might just play around and play around, play around, play around. This average will just get close. Eventually, maybe there will just be one day, bad day for the market. The price will collapse back to the average. There will be handshake again, and trend will continue. That's the way I see US100. Now that said, let's go back to, since we know that trend is up, let's go to our template and pick this. And now we can now go to D1 and check what's going on. Remember, we can also use moving averages. It's one exponential anything. Okay, so based on what this D1 is saying, the price is actually playing around support and around support on it. So the price has potential to push forward on the D1. Now, let's go ahead and check. Sorry, I think I'm still looking at this one. So, some people are raising hands. Don't worry. Let me check the comments. Oh, sorry. Oh, oh. Uh, yeah, apologies. Apologies. I just read the comment now. A lot of people said I've been on Japanese yen. So I'm going to go back to the beginning of this US100. Okay, and do, quite a justice to that. Right. So let me go back to the beginning. Now, let me go back here and open a chart. So what I did was to come here and open US100. And from here, I didn't do much. The reason I did was that, oh, sorry, I couldn't just do that. Let me close this one. So I did MN directly. Getting here, I was trying to tell you guys that please pay attention. I was trying to tell you guys that if you look at this chart, the price is on the upside. That means the price is trending to the upside. Now, I know one thing about price, nothing lasts forever. If you dip down, it will come up. If you go down, if you go up, it will go down. So, but for US100, there's a particularity here. First thing you want to look at is if you plot a trend line. It is almost at 90 degrees, right? Telling you that even if there is going to be a crash in price in the near future, the crashes, maybe there's a terrible day, maybe they say one CEO of one company that makes US100, stole money, which is not, is not likely in the US. Okay, it's not in Nigeria, not, castigating our country. Okay, so even if one CEO, do fraud or anything, or maybe one country goes on that, sorry, one company goes on that, company goes on that and says that maybe they declare bankruptcy and all that, all that. So if that one is not happening, then this price will continue to trend forward because no company wants to do. Remember, all these US100 or indices have constituent companies, just the same way your senator have you as their constituent, right? You are a part of a senator, a part of a board. Okay, so this US100 is also comprising of some 100 stocks that makes up an index. Now, it means that each of the companies that makes it up also want to make money, right? Nobody wants to lose money. Now, let's say that if we're not seeing, bankruptcy, we're not seeing economic meltdown, we're not seeing the government shutdown, okay, we're not seeing anything bad, then this price will continue to go up. Appreciate it. Now, the first thing you want to do is to remove this line and put a moving average. And that moving average will give you an idea of what the price is doing. And the one I like using is 50. Okay. Now, this tells us that the price is well supported to go up. But if this price is going to go down, then it will go ahead and do a handshake with this. Now, the handshake we have seen here, there are not many, which means that the price could just do a handshake in the future. There was a handshake here, right? That means the price come back for the average too. Now let's look at the W1. Okay, distilling it down, we can see that, of course, there was handshake in those areas. That's on the W1, right? Let's do this, adjust. So on this W1, we can also see some handshake around here. See them, but they are plenty, right? Let me see this short box that I actually used to highlight them when my screen was not showing. So there was handshake there, there was handshake there, there was handshake, around there. So what I said around here when the screen was blank was that price and averages are friends. I remember that. And so when the price was up here, what the price did was that after waiting and waiting, price has been volatile going up. We're not waiting for the average. The average was just quietly following. So the price got here, a little bit of waiting, average got close, jump again to this level, a bit of coming down, not having a sharp here, and jump again to this level. At this level, the price is already tired. Yeah, in fact, at this level, the average is already turning away. Say, I'm not falling again. But if you look at the pattern, you can see that the average is already turning at this level. What the price did then was to go to the average and the handshake. Now, that handshake resulted in the price descending to this level. Now, at this level, the price pushed back up. So now the handshake again. One resistance and drop below. Now, remember, price and averages will always follow each other. Eventually, the price got back to this level, got close enough and drifted away. Eventually, all this period you see, if you check, all this period of downturn and coming over was the period of COVID, was the period of war in Ukraine and all that. Okay, so eventually the price got to this level after all those war, Ukraine eventually subsided. Of course, eventually the price pushed forward to this level. When it got here, instead of the price to continue to push forward to the upside, it actually waited and waited and waited. Why? Because at this level, the average price was very far away, and the price needed to find an average. So what it did was that it actually traded down a little bit, got an average price here, even though there was no proper handshake, and pushed forward to this level. Now the price is here. The next question is, will it continue to push forward or wait for the average? I think the price, if it doesn't come back for the average, to wait for it. Now, let's go ahead and pick D1 so that we can get up close and personal the price. So at this level of D1, I push this one in a little bit, we can see what the price is doing. So this is where the price is right now. Of course, for the D1, we cannot say that the price is too far from the average. No, we can say that the price is actually close. Okay, so the price has potential to push forward. Remember, we're talking about averages. So even if the price will collapse, maybe there is something, of course, if you look at the constituent stocks, eventually, see, for example, let me see your shares. Give me a second. I want to share a screen with you guys. What could make the price drop from that level? Let me share my screen now. One of the things that can make the price fall from that level is if the constituent stocks, US 100, 100, US 100, sorry, not that, let me just write it like that. Like that, constituent stocks. Okay, so if you see eventually that any of these companies, all right, so let's look at Slick charts. If any of the companies, maybe lose money, okay, you can see that from what we can see now, the company, they're up to 100 anyway, so you can go down, down, down. So if you have a lot of red, okay, like all these ones, a lot of companies lose their value, you will definitely see the price drop on the chart. But these values they are losing is very small, minus 2%, that's about -8. Okay, so from 4, maybe 420 something, it dropped to 416 and it's still dropping. Okay, so that's about 2%. So it's actually still good enough. So we are not seeing like 10% drop. We're not seeing something like 18% drop. So because of that, I think this price might just be playing around, be going down slow. Okay, so buying may not be advised at this moment. What you can now do is to wait for the price to return to the average, and of course you can pick it back. So if you go back to the chart and check, finally we can see that the price still doing this because some of the stocks are losing some maybe 2%. Okay, that's why you're seeing it's kind of like a stagnancy right here. So what you can do is to now go back to H4 to see if the price gets to support another level you can buy. Okay, if you go back to H4, the price is definitely around support. Okay, playing around it, and of course, if eventually all these rates we're seeing when we visited all those considered stocks, you saw a lot of red. If they persist, yes, the price can drop. And of course, when the price is dropping, remember, you'll be visioning, even if you're not seeing it, Divisioning places like W1, which is necessary for the price. We already said it, that the price could drop, right? We said it already. So the price have this much to cover, right? So eventually, by the time you now go back to, I think I was in H1 finally, this is where you'll be trading. So you can choose to say, okay, because the red is still there, you can be selling when the price returns to the average. So now you can now go back to your candles to get close, all right? So if the price get back to average on this, you can place yourself, right? And of course, one of such, I can still show you some, indicators you can use to actually, suggest itself. Now, this is one. So if the price return to, break the support, you can sell. But right now, the price is breaking resistance. So it means that you can still buy. That's all it is. Okay, but then because we know that on the D1 and the W1, the price have potential to, especially on this W1, price potential to drop. But on the D1, the price is good enough to go up on the D1. Okay, because the price is well supported. So I think by and large, I'm still on the direction of buyers since I don't want to sell this particular one. So buy is still good here at this moment. That's what I would say on US 100. So eventually you can, be looking to buy, but buying may not be only be when you not see bullish engulfing can do around this moving average. Then you buy, right? Not at the moment, not at the moment. This is looking at sorry, we're looking at 1 hour. So anytime you see bullish engulfing can do around it. And of course, you can also use a reversal indicator like this one to also lead your idea of what to do. So this would have been an ideal place to buy. Let me show you. Not now, anyway. You shouldn't buy based on what this indicator is doing. You shouldn't buy. Okay, so I can just use this one is good enough. So if you just check now, you see that the price just moved off an area of turning. Okay, this is an area of turning. Then just use arrow up. This is an area of turning. You can see that more like a partial bullish engulfing and that push that. So when the price returns to this kind of zone, you can buy. Right? Returns to the lower band, you can buy. Right now, the price at the middle band is telling you should be neutral at the moment for the US 100. So US 100 overall neutral. Let me check the comment section before we close. So who say they can't hear you? I don't know what you cannot hear. Okay. All right, so that concludes US 100 talk. That concludes US 100 talk. So what we have been able to do today was that we have been able to analyze gold, the commodity. We're going to analyze two currencies, USD JPY and USD. And as well, we have been able to pick one of these and have a critical look at. So whatever applies to currencies like USD and USD JPY is good enough. So I think you can just follow that. But by and large, for indices, I think what we discussed on US 100 is good enough. Of course, it can also apply to instruments like US 500, US 2000, DAX, and all that. So I want to thank everyone for this beautiful time. It's 8:59 on the dot. And of course, it's a good time to put a stop to it. But let me see if I can just enable the channel to see if maybe one or two people can just talk to me, say hello or something. I'm going to enable you or allow you to mute your speaker or microphone. So somebody should just mute or unmute his microphone and speak to me. Maybe I can just take one or two questions very fast. Go ahead. Who's going first?
Thank you. Please, can you just shed more light on the moving average? How you can
this your name.
That can you hear me?
I can hear you. Before I answer your question, this your name looks like Tinubu name. If I remove Y from your name and I put I, you can just rearrange it and have the name of the president, which is okay. So what's the question again, Tumbi?
I'm saying that moving average.
Yes.
Other time, how do you take decision with moving average?
But moving average is for the benefit of others listening, moving average is a dynamic support resistance indicator. If I put moving average on this chart is looking at US 100. What it means? Oh, sorry. Let me pick moving average here. Any moving average can do the same thing. They can tell you what is to come and what you are seeing. Now, if price, this is the price currently, 18151. It is currently trading above the red line, which is the moving average. Every time you see it like that, then it is acting as a support for the price. That's the job at that moment. If the price is trading below, that means if you're having candles, okay, let's zoom in. Let's zoom in. If you're having candles close below the average, what this information is telling you is that the price is closing below its average, and so the moving average is actually acting as a resistance for the price at that moment in time. If you have the candles closing above it, that means the average is acting as a support at that moment in time. At the close of that candle, that moving average is a support. At the close of this candle, this red one, okay, let me see if I can use. Did I change the template of this one? I didn't know. Sorry about that. Let me zoom in. And then, okay, let me not use this one. Let me use gold. Let me use gold. And now I'm going to insert an average. Insert a moving average. Somebody wants to know what it does. Any number you put here will work for you. Depends on the one you use. Say, for example, I'm using 21. And I change to exponential. I do okay. So let's zoom in now. Look at it critically. You see this candle, this green one that just closed now. Immediately this candle close, reference it to the moving average right here. What the moving average is doing right now is acting as a resistance for this price. All these candles that close under, the moving average is acting as a resistance for all of them. As if the moving average wants the price to go down. So in fact, that's what it's doing. Pushing the price to the downside, resisting the price from coming up. Eventually, though, the candles will eventually close above it. Because one day, nothing lasts forever. Like this candle now, this one. Eventually, after all this close below, this one eventually pushed above and close above it. At this moment in time, when this candle closes, this average is acting as what? Support. You got it right. So the moving average is acting as both support and resistance for the price. When the price is closing above, the moving average is supporting the price. When the price is closing below, the moving average is doing what? Resisting the price. Is that clear, sir?
Yeah, thank you.
Thank you very much. All right, so next question, one more question, then I'll close. Somebody says, I have a question. When you were analyzing good, what parameter did you use to mark the line that intersected with the trend line? I don't know what parameter you're talking about, but I use a lot of tools. Okay, this part you see on this MT4, this part you're looking at, let me see if I can move it. Can you see this tool? This thing that I'm dragging. We call it tools. Okay, MT4 tools. And these MT4 tools have a lot of things you can use to your advantage. Okay, it has a line, it has, and you can also insert them. You can click on insert and pick shape and pick anything you want. The one I was using was rectangle. That was just using to mark whatever I want. Okay, that's the one I was using. All right. So, hello, sir. What's the difference between verified resistance? Where's that question again? And proven resistance. A verified resistance is a zone on the chart that has been tested minimum of 2 times. A proven resistance is a zone that has been tested minimum of 4 times. That's the difference. Okay, that's SLG 174278. Question to everyone. We wanted to know what difference is there between verified and proven resistance. So I think I just gave you the answer, right? One has been tested twice. One has been tested 4 times. So if I put, for example, this indicator on the chart, you'll be seeing proven resistance and verified resistance. So if you look at this one now, you see verified resistance test count how many times? 2. And of course, you can check that we also have it twice tested, right? Put this arrow there, that's 1 test. Put this arrow there again, that's 2 tests. Sorry, let me copy this. Now, that's 2. That's the count you are seeing there. Now, if anything happens, I will have this price push back to this level. It also count, it will still be verified. Test count 3. But once you have it up to 4 times, then it will be proven resistant. It's just changed. For example, if I go to H4, let me see, I just go to H4. I go to H4 and check, see some levels. Let's see if we can just use, I don't know if I just go back to anything. You can see some proven levels. Let me check USDJPY. I just see that one very fast, very fast, very fast. So that I don't explain what verified resistance is and what proven resistance is. Okay, so we have this one now. Verified resistance test count 1. Okay, we tested once again. So verified support test count 1. Test count 1 as we tested once. Okay, so let's see if we can get some proven ones. Proven resistance, proven support. I'm looking for one. Zoom out. Zoom out. Who is that? Indomie Bawo. What's it? Leave. That boss is buying. Boss is buying Indomie somewhere. Okay, so now we have this one. You can see the proving level there. So proving test count is up to 4, telling you that the price has been tested and tested and tested. Now we can use arrow to show you, or maybe a box to show you. Because I was asking for a box. That's test 1. That's another test. Another test. Maybe there and there. Two of them could coincide. Okay. And of course, remember you can also zoom out to check very well. So those are the levels as you can see. And now this one was a support, and now it's turned resistance. So that's why you're seeing this count. Proving support, test count 4. So you can see the number of count on the screen, right? So I think by and large, I've been able to explain that. Finally, for the last question, I don't know what I mean is how did you mark out the other line that intersected with your trend line? I don't really know what you're talking about. What is up the low or high? I don't know. I don't know how to explain that one. Okay. Maybe when I see one-on-one, I can look at it. So somebody, Lisa, the last time you said I should contact you, but I don't have your number. Right? Okay, it's very simple. Contact your account manager, ask for my phone number. Right? Or you can just write it 09020398739. I hope you got that. But thank you very much, everybody. This will put a stop to it, and of course, I'll see you again when I come again. Right? Green tips always.
Thank you, sir.
God bless you, sir.
Thank you, sir.
We are indeed grateful, sir. God bless you, sir.
Thank you, sir.
Hello, everyone.